Crypto prices are absolutely booming right now. You're probably very nicely in the green and it's feeling really good. That $1 million dream is absolutely alive. We've just kind of stagnated now. It stopped growing as much. We've kind of hit resistances across the board. And knowing what's going to come next is the $1 million question. Nobody knows. My opinion, I think that we are potentially going to get a pullback before we go parabolic, or we might just skip that and just go completely parabolic. It's hard to say. The next drive is going to be driven by those retail investors, those dumb monies, those FOMOs in, and that is actually going to be what drives it to the next level. Nobody knows when they're coming in. But Render has also been on a tear and it has done very, very well. But as we know, its price is very much linked to the AI narrative, which in itself is absolutely booming. Render is getting the benefits of the crypto market booming as well as the AI narrative booming. But this absolute meteoric rise in the AI boom kind of brings me back to the dot-com bubble. If you don't know, in the dot-com bubble, we saw huge drops. No, I'm not saying the Render is a bad project. Chill out, don't get defensive. I think it's a great project, and I have spoken about it a lot on this channel. If you were subscribed, you would have known. I just want to give you a view from the other side. So, as you know, obviously the AI narrative is booming. Robots are taking over our jobs, and soon we will all be able to just play League of Legends all day, flame each other, wish that goldfish would get cancer, and all the other things that are toxic about League of Legends, because we'd all live in absolute harmony. But the main driver of AI narrative in real terms is Nvidia. As Nvidia goes up, people believe more and more, and Render is often seen as the Nvidia in crypto. As Nvidia posts record profits and the share price goes up, whilst AI is actually developing rapidly, we're actually set to have more hardware than we need to actually deliver what we have in terms of technology right now. And that could actually mean that Render would have a harder time getting adopted. So just for a minute, cast your minds back to 2001. If you were born after that, then you're just going to have to ride with me on this one. So in the late 90s, everyone thought the internet was going to be the next biggest thing, and everyone just started throwing their money into all of these internet companies. And one such company was Cisco. Cisco was the producer of a lot of hardware. They made a lot of fiber. Everyone wanted hardware. Telecommunications companies were installing thousands of kilometers of fiber, and they were all buying this from Cisco. And Cisco was posting record profits. The share price was absolutely catapulting, and it all looked great. If you take a look at this article here, and switching routers to the masses, etc. And basically, okay, here we go. It's from a stock split adjusted price of 0.08 per share to a high of $80. From $80, it officially became the most valuable company in the world, getting close to Nvidia. Nvidia is currently almost the most valuable company in the world, other than Aramco, Apple, and Microsoft. And it's gone up a lot, like a lot. It's gone up from 250 billion to 2 trillion market cap, which is absolutely insane in less than a year, and obviously it does raise some red flags in some sense. So we see here, despite growing revenue from 19 billion in 2000 to nearly 50 billion in 2001, Cisco's stock has never fully recovered. And if we take a look at Cisco's share price, we can see something very similar to that of Nvidia. Absolute skyrockets, and if you had hit this bottom, look how long it's taken you to recover. I mean, even if you bought at the top here, you still haven't even made your money back, which is absolutely insane. So I'm not saying Render's exactly like this, but there's definitely a lot of lessons to learn from this. If we take a look at Nvidia itself, it has gone absolutely parabolic as well. P ratio is actually closer to 90, I believe. It's not actually 68, unless it's come down with the new earnings report. So Nvidia is actually also posting record revenue growth, up 265% from the year before, which is actually pretty similar to the growth that we saw in Cisco. And whilst you're like, yes, the internet was the next biggest thing, you're literally talking to me on a video on YouTube right now, and you wouldn't be if the internet wasn't a big thing. And you're absolutely right, but the thing is, it actually took around 10 years for that hardware to actually start to be used. And the problem with it as well is that Cisco became massively overvalued. It sort of became disconnected. It had a P ratio of around 200. And the second thing as well is, when people buy that infrastructure, like the chips from Nvidia, they don't have to replace them straight away. And I actually looked this up just to see see how often Google actually replaces its data servers. And according to this 2022 environmental report, Google replaces its servers every 6 years. Who is buying these chips from Nvidia? Well, you guessed it, it's Google, it's Microsoft, it's Apple, and it's Meta. And these are the main purchasers of these Nvidia chips. And why are they buying them? Well, these companies have literally hundreds of billions of dollars sitting around because their business model is just so profitable and they have nothing to do with this money. There's not really any new companies for them to buy. They've made just tons of acquisitions and there's not really any new companies they want to buy. And if they were to buy a company, that would sit on their profit and loss. Obviously they would, no, it wouldn't. And the thing with actually buying hardware is it doesn't affect their bottom line profit. So if Google reports the 20 billion and they buy 20 billion of chips, it wouldn't be a zero profit. This would be treated as a capital expenditure and it would sit on their balance sheet, which they would depreciate over time. So just putting that 20 billion into this hardware, for example, it doesn't affect their share price and therefore they might as well. And what they're essentially doing is setting up to do cloud compute as a service. And the idea as well is if you build the infrastructure, the work will come. And that's exactly what happened in the internet. It only just came 10 years later. Because Nvidia has an absolute moat in this area, because to produce these chips, you need something called a fab. And I'm not going to go into the details of that because fabs are very effing expensive. It's something like $200 million for one fab. Don't know how many chips that prints, but to get more chip production, you need to buy another $200 million machine, which not a lot of people have laying around. Obviously, imagine Nvidia does now, but they're only actually produced by one company in the Netherlands. So it's also that this company has just max capacity in producing these fabs as well. So that is what's limiting their production. So this just gives Nvidia an absolute moat because nobody else can kind of produce these chips at the moment. And then when Nvidia's stock price pumps, so does the AI crypto space. So what does this mean? Well, number one is that these companies are setting up to offer cloud compute as a service, just like they have Google Cloud at the moment and Apple has iCloud. And this would actually be a direct competitor to Render, which would make Render's adoption much tougher. And also they would actually have the right chips for AI, which Render doesn't actually have a lot of these chips right now. But I wouldn't count Render out. Obviously we can see Filecoin actually doing very well in the storage space and they've actually carved out a lot of revenue for themselves. So I'm not saying that Render's not going to get any adoption because it's a great project and there would actually be a lot of adoption within the crypto space because crypto just kind of wants to stay within crypto and keep it as decentralized as possible. Then secondly, what happens when Google, Microsoft, etc. have bought all their chips? Well, Nvidia's revenue would actually drop. I don't think this revenue is sustainable unless some new AI technology comes out which requires insane amounts of compute that all these millions of chips that they have bought cannot handle. As we saw, Google replaces its servers every 6 years, so they might actually realize they don't need this much hardware, they've just overdone it, or they just might actually keep a load around because they can just maybe balance it out similar to Render does. Maybe they can share it between the chips without having to buy new ones. We don't know that yet. But I mean, the real question is, how long do we have on this? And actually, because Nvidia cannot produce chips fast enough, there is actually around an 18 to 24 month time window in which Nvidia will be producing these chips on a large scale for Google and other companies just because they can't get enough out the door quickly enough. And actually this is shown because Nvidia has predicted 110 billion revenue for next year, which is almost a double on the current revenue. So we still have records to beat within Nvidia. They're going to keep posting record profits for the next 18 to 24 months. And that actually takes us past the bull run. I think that bull run is going to end around November, December, January of next year. So that actually lines up very, very well. I think we'll get a few more record-breaking quarters for Nvidia, and this will pump the AI crypto stock much, much higher. If you haven't seen my price prediction on Render, I basically predicted that we're going to get around a 5x in this bull run. But the huge downside is when we do get that 18 to 24 month period expire and Nvidia starts writing down its revenue estimates, we're going to see a decline in AI stock and the crypto winter is going to sit in. And I think the coins that are going to get hit the hardest are going to be the AI coins. They're going to fall much below their current pricing because the demand for AI is going to absolutely plummet in terms of the hardware side, whereas we're just going to be developing out the software side. So if you look at the emergers from the dot-com bubble, it's Google, it's all the software companies that actually emerge as massive growers. So it could be the AI stocks that relate to software as opposed to the ones that hardware that will actually do well after this as they start to develop their software that will actually work on this hardware. What am I basically saying? Obviously this is not financial advice, but I'm just saying that if any coins you need to get out is AI hardware deep in coins at the end of this bull run. I think they'll absolutely smash it next bull run because they'll come from absolute lows into sort of what will be new highs, and they'll keep growing their revenues and all of that infrastructure as they grow, because Render's infrastructure is actually pretty small right now, so they've still got a lot to run. But I think after this AI boom cools off, we're going to see some lows in these coins, so it's best to get out of these coins at the peak of the market. Otherwise, just get out when you can. Obviously, if the bull run has ended, otherwise you're going to be hurting real bad. And I actually heard a lot of this information on the All In podcast. They were talking about Nvidia's share price, and they were talking about the sort of headwinds in the market, and I thought it really linked back to crypto quite a lot. So if you do like podcasts, it's actually a very good podcast to listen to. They talk about like American business, economics, etc., and sometimes they do talk about crypto as well. So anyway guys, thanks for watching. Like and subscribe if you liked the video. I hope this provides some unique information, maybe stuff that you haven't heard anywhere else.